Welcome back to Closing Bell on the 17th of November on a Tuesday. And for today's segment, I want to speak about 4 stocks in focus. So the first one is Palantir. Palantir was up about 15% and I think they dropped up to 12%. They actually did better than Tesla today. They're up because loads of hedge funds, the likes of ARK investors and a lot more other very great institutional funds have been buying into Palantir. Reason why? Maybe they're attracted to the reason of the economic mode. They're quite different. There's no competition. And also the reason for Palantir being bought up is because they're really cheap for institutions to buy under $20. They can own a large volume of stocks. And do you know that Palantir never went IPO? IPO means initial public offering, where they offer a set amount of shares that's going to be sold at a set amount of price. But they actually went direct listing, meaning they did not increase the amount of share values, but they're selling what is available. So in terms of lockup period should be in March the 30th. So you know what happens lockup period when it cools off. 80% of the shares of the initial original investors can start selling off the shares. So it's going to be interesting to see how these initial investors will be holding on after March, because end of the day, all depends on where the share price will be sitting. If Palantir starts going up to the highs of 30s and 35s and making about 3x, 4x, this will boost more reasons for initial investors to just let it go. So Palantir is up. I bought a bit more Palantir again today. I think the business model is great, but it's going to be a volatility stock because it's up 75%. Just I'm not surprised that all the retail investors have bought at $10 to be letting it go once it hit 18. 80% gain in 6 to 8 weeks. That's a lot. I'm not surprised if people let it go. So if it does drop, I'm going to pick up some more. I think it's a really good stock to spec for now. Okay, the second one is Plug Power, who went all-time high at $25 and then it dropped to 22.9. So it's about 8% drop. Why? What happened? The company decided to dilute more shares, to sell 10% more shares. So I think there was about 43.7 million shares, which is worth about 750 million. So they offload another 10% of the shares, increasing the stake. And they have offered to initial investors for an 11% discount. So it's quite surprising by the analyst saying that, wait a minute, we've got 11% discount, but the share dropped by 8%, so it's still a good deal. You could actually buy and then sell it off for a difference of 3%. So Plug Power needs the money. Plug Power needs the money to execute more projects, to get more income capital, to buy more equipment, to install more bases. Remember, Plug Power is a company that requires huge amount of capital to load, and then after that it's all about the servicing, it's all about the contract that they make back from their clients. So it proves that there's room for growth in the client sector, so they're getting more contracts. So waiting to hear in the next quarter earnings. Have done really well this quarter. So Plug Power, I have a position myself, and I want to see for the next few days. I'm waiting for the technicals to show me that it's buy. I think it's still on a sell for the next couple of days, but I'm waiting for the technicals. But it's not close for me to buy a second stake in Plug Power. And yes, I'm already bought in Plug Power about 2 days ago. Okay, the next one, Amazon. I was thinking of selling Amazon shares and poof, the news came out saying Amazon and pharmaceutical. Amazon is going into pharmacy. They have already been into pharmacy when they bought PillPack back in 2018. And now they want to do online delivery. But then again, going to the pharmacy route, you can see all the other pharmaceutical online delivery companies dropping because Amazon has just jumped in. If you own Amazon Prime and if you're ordering for prescription for lotion or your diabetic pill, your diabetic jabs or anything, it could just be done through your Amazon Prime if you transfer your account, obviously. And finally, how can I not talk about Tesla? So Tesla went up about 15%, dropped 11%, eventually dropped to 7% growth. So it's around about a humble 430, 440 mark for Tesla. So I hope that you guys got my message not to jump in, because I know there'll be a roll-off, and indeed there was a roll-off. The momentum wasn't great. The reason why, is it overhyped? No, I can give you the reason why. The reason is because this S&P 500 induction is not being cleared yet. So the committee just announced that Tesla will be part of S&P 500, but they've not announced who will be coming out and who else will be coming in. And because Tesla is such a huge cap stock, about 390 billion today, going into the index, they need to see who's coming, and they need to break it down into phases because they've never done this big stage before. So it's all about how the details they're going to be launching on the 21st of December. Will it be in 2 phases? That's what the rumor is. And institutional fund investor will be buying, I think, between 5 to 50 billion. I'm not sure, but round about that factor. So a lot of buying will happen on the 21st of December. So if anything would happen, take this as a holiday resort period until the momentum comes again, just around before Christmas and January. So this is me for Tesla. And interesting facts about Tesla, which I saw on Twitter today, is somebody said that Tesla has actually gone 55x. So all the initial people who bought in the early days back around about 2010, 2012, 2013, 2014, if you own Tesla shares, you'll be up 55 times today. That's a really interesting fact. And I cannot imagine owning a stock more than 10x. What about 55x? So this is me on Closing Bell, and I hope you enjoyed it. And extra bell, I want to focus about Nvidia. Yes, it's a late video. I've got difficulty trying to gauge what to do with Nvidia. So stick with me in extra time and I will share my views.